Welcome back to Investing with Confidence, and we are talking about the do's, the don'ts of the financial markets and how you can invest with confidence, sponsored by Online Trading Academy. If you missed tickets to that investing class that we do right here in Bloomington, it's a live class, hands-on, learning about the stock market, how the markets work, and how to make better investing decisions. You can just call 952-814-4410, or you can text the word INVEST to the number 484848. When you do that, you'll get a text back and also a call to make sure we get the date that makes the best sense for you. So, Al, let's talk about some of these different stocks that are, I guess, pretty popular in the news. New companies, some of these are, that had some great moves in the past couple of years, or I guess year and a half, really. Mm-hmm. And they kind of have fell off the train a little bit. And one that's been in the news a lot, it's Roblox, right. Roblox Corporation. Mm-hmm. And it IPO'd back in I think it was March of 2021, and roughly around $60 per share. Ran up to about $140 per share back in November of 21, so not that long ago. Now we are down 50% off of that high. From that 140 mark, so down at roughly about $70 per share for Roblox. So investors, it's one of those things. It's almost like a pump and dump. They pump it up and then it just drops straight down so fast. And people that felt really good about those stocks may not be feeling so good anymore if they are buying and holding.
Right.
So let's talk about that a little bit. I'm seeing a couple supply zones that if this does continue, does go back up, that it could push it back down again. What are your thoughts on Roblox moving forward? Is it a buying opportunity? And these are just opinions here. Is it a buying opportunity, or could this continue to keep going down?
Yeah, and that's important to know. When we talk about these stocks, these are not, we're not advising you to go out and invest in these companies. We're just talking about some of the details and some of the things that might impact these companies. Roblox has had some big moves up and down. On February 9th, I think it was up 11% on that one day. And the reason that it was is because they formed an agreement with the NFL. I think it's called, what is it called? The NFL Tycoon Metaverse game that they came out with.
Yep.
And that really impacted the stock. But why did it go up? The stocks just don't go up on their own because of some news. They go up because people bought them. They go down because people sold them. So the important thing is, and really not so much what a company does, what the fundamentals are, but it's identifying where people are going to be buying and selling these stocks. And when we see a big move up or a big move down, it really just means that the price has moved into an area that we're aware of quicker. And what I mean by that is that with our strategy, with the core strategy that we teach and we introduce you to in these free classes, that helps us to identify where the big buyers and sellers are basically before they take a position. So we're already positioned when something happens that quickly moves the stock from one price up to a higher price. Typically, it's moving it quicker and closer to a selling zone, to a zone where we may want to take the opposite side of the position.
Yep.
Conversely, if something happens to move a stock down, it's going to move into an area where we want to be buying. And that's an important thing. It's not so much the fundamentals of a company, it's where the buyers and sellers are. So companies like Roblox, there's going to be volatility there.
Yep.
And again, that's a company that's a growth company. It's still in a growth phase. It's relatively new. Right now, it's trading for lower than it was when it came public. So is there an opportunity there? Well, if you come into these classes, we'll show you how to determine whether that might be the case.
Yeah. You know what's crazy, though? That when it came out back in 2021, it's had negative earnings ever since inception.
Well, that's often the case with a company, especially when it's a new company. It's not going to have earnings because the all of the money, or the majority of the money that comes into those companies, goes into the growth phase of it. So you can have a company that's actually an extremely good investment that has no earnings for maybe several years, but that's when it's in its growth phase. Those are the companies, as I mentioned earlier, though, that are going to take the biggest hit from increased interest rates, because their cost of growing, their cost of their debt is going to be much higher.
Yep, and that's why you brought up a great point of supply and demand. It's identifying where big banks or big money is moving the market, because the banks, the institutions, they actually move the financial markets. So what we want to identify, and what Al was mentioning earlier, is a core strategy that's designed to follow those big banks, follow those institutions. And, the key is that I think a lot of our listeners may not know about, and we'll introduce you to this stuff in these investing classes for everybody that comes to these classes, but it's where to get in your positions, but also where to get out. I mean, for instance, if somebody bought Roblox back in November of 21 at $79 a share, it went up all the way up to 140. Now it's back down to roughly around $70 per share. So it's negative from there. So the people that are just buying and hoping things go up and they don't sell them, over time, you lose time. But in this case, in a lot of these stocks that we're covering, they're negative from those different areas. So you have to understand supply and demand, who moves the markets, and then how to trade like them. I teach a lot of these workshops, and one of the first things I have people write down is trade like a bank, not against them. If you need help with that, if you want to learn more about that strategy that's designed to teach you to follow those institutions, we have investing classes right here in Bloomington. Al teaches these that are about 2 hours, and we dive into how these markets work, but how supply and demand works in the market, basically how the buying and selling actually functions, so you can make better investing decisions moving forward. So call 952-814-4410. That's 952-814-4410. You can also text the word invest to the number 484848. You're going to get a call right away to make sure we get the right date. But if you're quicker than us, pick the link that we text you right back and find that date for you. When you get set up with this investing class, this is a pretty important thing here. Make sure to ask for the free stock picks, because we're going to give those away with registration on this free investing class. So I want to talk about another stock, Al, that has been pretty popular in the news, and that one IPO'd back in probably around the same time as Roblox. It looks like July, around July of 2021, and that is that good old Robinhood. And people are thinking, we have a lot of Robinhood traders or Robinhood followers, I say, that that are out there in the world, and it's maybe not all what it's cracked up to be. It IPO'd roughly around $34 a share, ran straight up to $83, and basically straight down. Now it's sitting lower than what it IPO'd at about right around $14 per share, which is actually down 83% from its highs. Now think about that. That's a platform where people, I guess we'll call it novice investors get into, because it's you see it on the news, so people think it's something normal to get into. But why? Let's talk about this. Why is it so important to use the right brokerage account in your trading and investing?
Yeah, and there's a big difference between brokers, and we talk about that in these classes. There's a difference as to what you're going to get into something for, the price that you're going to pay to get in, the price that you're going to get when you get out. What Robinhood did, the good thing about Robinhood is that it caused a lot of people out there who had never invested in the market to become investors, to become familiar with the stock market and realize the kind of the excitement and the potential that's there. However, a lot of those people are neophytes. They don't have a lot of experience, and they typically are high risk takers. And that's what we've seen. A lot of these people have gotten into stocks based on social media. With Robinhood, one of the things that I think attracted a lot of people was basically zero stock trading commissions.
Which is it really zero?
Which is not really zero. And that's where Robinhood got into a little trouble because of the way they explained it to their clients. There is a cost. Nobody is going to let you trade something without them benefiting in some way financially. And that was the case. Now, that's true. Most of the firms out there don't have commissions for stock, and there are ways that they still are going to benefit, but there is a big difference between brokers and in the exchanges that they use to actually execute a trade. And we talk about that in these classes. There's also a difference in the assets that are available to trade. And what most people don't understand is that the trades, the assets that the big institutions trades, the hedge funds, the big brokerage firms, the assets that they use are not necessarily and usually are not what they are telling their clients how to trade.
Yeah.
Yet those are available to everybody. And if you're looking for something other than kind of buying into that buy and hold long-term strategy, then you need to be able to have access to something that has a more short-term lifespan to it.
Yep.
But also a lot of those assets that are shorter-term trading vehicles that the big institutions use, even people like Warren Buffett, they trade with what we call leverage. And that's a way of maximizing the value of every investment dollar you have. And that's one of the things we talk about in the classes because there's two things to look at there. Number one, if you don't understand leverage and you use it, that's a bad thing. If you don't understand leverage and you don't use it, that's a bad thing because you're not taking advantage of it. But what we cover is the bad part of it, how to eliminate that so you can still participate in high reward investments with low risk and with a smaller amount of money to actually participate with a much higher valued investment.
Yeah, and that's one of the big things we cover in these investing classes is leverage and how to be more capital efficient. If you want to learn more about that, just text the word invest to the number 484848 and pick a date for this investing class. But you kind of brought a couple terms up there that I was just kind of thinking about. And you were just saying, the brokers are doing something a little bit different than they're putting their clients in. They're putting their clients in the market every other Friday. If you think about it, every other payday.
Right, with your retirement accounts.
Especially your retirement accounts, and which really has no regards to price. So I want to talk about a term, wholesale versus retail. We got a little bit of time here. Just explain the difference between buying at wholesale and selling at retail in the financial markets, which is exactly the same as you do in your everyday life.
Well, just look at a company like Costco. They buy at wholesale and they sell at retail. The prices that they pay are that they experience are very low, and then they turn around and they sell that to the public at a much higher price. The same thing is true in the financial markets. Wholesale is just basically buying low. Retail is selling high. If you are buying at retail, you're buying high. That's exactly the opposite of what you should do. So what we want to do and how we address these markets with our core strategy, our foundational investment strategy, is show you how to identify where to get into something that is a low price. Buy at wholesale and then sell at retail. To be able to do that, you have to identify where the buy orders are that are going to drive price up and where the sell orders are that will drive price down. And the difference between the two is going to be your profit. The closer you can come to where institutions are buying and the closer you can come to where institutions are selling, the greater the profit potential for you. Also, the greater the probability that trade is going to work in your favor, and it also happens to give you the opportunity to have the lowest risk entry point.
Yeah, I was actually teaching a class this past week, and we were talking about investors or just regular people say when they talk about their trading, hey, what's your strategy? Oh, I buy low and sell high. And we kind of talked about that. We kind of unpacked that a little bit. What does that really mean? So what we did is we pulled up a chart. And the chart, there's candlesticks on a chart. And that's where you get all your data from, is a price chart on a platform. But we were looking at that platform, and they were saying, okay, I said, well, where's low and high? And nobody had an answer. It's like, well, how about now? Is that low? Is it high? Well, what do you think? No one really knows what low is. Nobody really knows what high is. And that's why you need a strategy that's designed to identify what wholesale or low prices are and what retail prices are, which is high prices. And now you really dive into that in these investing classes as well. I mean, you go over all those different concepts and techniques when you teach these classes. Right. We have these during the week. We also have these on the weekend. And we go through many topics, but some of the topics that we cover in there, our step-by-step rules-based strategy for trading any asset in any market. Al was talking about the leverage assets. How to buy at wholesale and sell at retail, just like the institutions, but also some of those common mistakes, and we were talking about that, that novice investors make, but how to minimize them. So call 952-814-4410 for 2 tickets for this investing class. This is for callers 1 through 10. So you got to call right now. When you call in right now, make sure to ask for the free stock picks that you're going to receive in the Financial Quick Start Kit. You're going to get those just for getting set up with this. And also, if you want to make it easy, text the word invest to the number 484848. Coming up next, we're going to talk about some of those stocks that Robinhood was in trouble with, AMC, GME, GameStop, and AMC Theaters. Coming up next. This is Josh and Al. We will be right back.